Now, just quickly, sentiment is at a level where we see bottoms. We're at 60.6% for the bears. The percent of bulls is 19.4%. The tariffs have done this. We've been in above 40 for the last 4 weeks. We're going to get another number this week. It still be another bad number, but this is the kind of sentiment where you do develop bottoms. Fear greed index is moving up off of the previous lows as the S&P moves lower. It's got a reading at 24. The previous close was at 19. And we're at levels of extreme fear. When we peaked in February, those divergences, we were only at a neutral reading. We never reached greed. We never reached extreme greed. And to reach extreme greed, a lot of times you form divergences and you don't, but we didn't even reach greed. We didn't even break above 50 on the fear greed index. So again, I still think we're going higher. If we do end up going lower, you might see it diverge with the S&P. That's what we did have at the January low. You don't have to. You might just reach an extreme. That's what we had in the summer with the bottom in the summer in August. Extreme readings, or sometimes you get divergences at extremes. But again, still the risk taking out the January low, what happens with that, or if it happens or not. Okay, a sharp down day. The Dow was down 650 points, down about 1.5%, just under 1.5%. The S&P 500 lost 1.76%, down 100, almost 105 points. Back below 5,900 at 58, almost 5850, rounding up. NASDAQ was down 2.64%. The Russell was down 2.81%. The VIX was up 16%. The VIX at the highs was up over 22%. The VIX is predicting in the next 2 trading sessions, being up to 16% in the next 2 trading sessions, that we will get a bounce or a bottom. Now, it predicted that previously last Thursday, and it was correct. We got a bounce on Friday. It wasn't the bottom. We did move to a new low. We got a lot of bad news today. What really rattled the market was President Trump. Let me just bring up the headline here. President Trump dashed all hopes for a last-minute Canada-Mexico deal ahead of the 25% tariffs are going to kick in tomorrow. Now, again, remember, we had the tariffs for about a day and a half, 2 days or so, and then we had concessions. I told you there was going to be concessions out of Mexico and Canada, and the tariffs were paused after about a day and a half or 2 days or so. Could we see the same thing here? We have extreme fear as we have sentiment extremely high. Bearish sentiment is a 1-year high last week. We'll get more data. And as you can see, the headline just popped up here. NVDA down 9% on tariff fears. It moved to a new low, took NASDAQ to a new low, took S&P to a new low as well. I told you last Thursday that I thought we would go down and hit the gap fill and the 78.6 Fibonacci and rebound and try to bottom out at the CPI gap fill. We still may do it because we're hitting the lower end of the channel. But before I start and go on with the rest of the video, I wanted to apologize. I'm one of the few people that will tell you exactly what I think. Right or wrong, I will always tell you what I think. And I'll give you alternatives if I am wrong. Now, I've told you the January low would take place. I told you back up here that when we reached the peak right here, that again on the 19th, February 19th, I told you we were going to sell off. That we were topping, and I was correct about the top. I was correct about the sell-off. I told you I gave you 2 scenarios for the wave 2, and that was at the trend line, which we overtook there on Thursday. We had this low, we bounced, and then we took it out. And I told you that if we took it out, my second scenario was that we fill this gap and that we bounced at the 78.6 Fibonacci. And I told you Friday, my conviction was that we had a bottom there. I was wrong. That was not correct. Again, still be wrong, and we take out this level and wave 4 never finished over here, that we finish it down at the 200 period moving average. That's what Bitcoin did. We may not do that with the S&P 500. Bitcoin hit that 200. So far it's holding as a low. We're going back and testing it. We see a tariff relief rally, as I talked about over the weekend. See concessions out of Canada and Mexico. If there's some kind of pause again, even if the tariffs stay in place, does something else happen? what we're seeing with crypto, rally off of the lows called on Friday at the 200 period moving average. We got the announcement on Sunday of the crypto strategic reserve, a massive rally with Bitcoin. It gave it back now. It's given it back. I think it's probably going to set up a higher low. But the S&P 500 did take out the low. I did want to apologize and tell you I was wrong. I do have the guts to always tell you what I think. I still may be right about the count. This still could be a wave 5 and we get a higher low above that. But I was wrong about this low being it. We've come back down to test that CPI gap one more time, and then we rebounded back above it. Look at that. We hit the trend line and bounced at the very end of the session. So we'll be watching this channel, which is still possibly a bull flag pattern. So just wanted to let you know. And again, we closed just under the 78.6 Fibonacci after breaching it. There are still forming multiple point divergences in the 60-minute time frame, this is the 60-minute time frame. Will I be right about the January low holding and we get a higher low here in this area after slightly breaching Friday's low just by a few points and turning back up and breaking out? Or am I going to be wrong about the January low and we go back and we take it out and we test that 200 period moving average? Again, I am of the opinion that we have an ABC move here, in that we have this ABC move right here. And I'll just show you my scenarios after I show you the 60-minute chart with this channel right here. Again, this could be a 5-leg push lower if we try to bottom out here, just slightly breaching that CPI gap fill one more time. We hit it on an intraday basis this time. With our hourly bars, we hit it little bottoming tills here. This time we had an actual closing bar here on the hourly chart, which was the hourly bar for our final bar of the session. When I told you that I thought we had a bottom on Friday, again, I told you I thought we completed the wave 5 right here, that this was the 4 and the 5 right here, and I had the little microwaves with the 5. Very well could be. This whole thing is an extended 3. We have 4, and now we have 5. But look at the really nice looking channel we got from these highs to our high, our rally of the session. We halted right there at the 50. I've got the trend line over it, so it's a little hard to see. But the green line is right there at the 50. And then we turned down, we made a new low, and we came down to this trend line. I've excluded the shadow here. You got a really nice looking channel. And then we did get a little bottoming tail there here on this. Sorry about that. I had to take a phone call. As we breach this level, and by the way, this charting program is showing bottoming tail. The other program, the other 60-minute chart showed a wider range bar, because there's only 6.5 hours in a session, and this program ends with a 30-minute bar. The other program starts with a 30-minute bar. The only goes 6.5 hours, so that's why the difference. But there was a bottoming tail here. But you got this channel, and you got the bullish divergence here. I talked about that, and that's why I told you I thought we had a bottom there. But again, it looks like, and really, you've got this little divergence over here that gave us this rebound. Then you got the divergence here that really gave us a triple divergence. Now it looks like you're going to get possibly a quadruple bullish divergence. That is the strongest reversal signal in technical analysis. You may recall that we had the multiple point divergences over here. We're getting it here, but it's a little bit more in a tighter trading range. Here it was more spread out, that you got these multiple point divergences. So maybe we see something like that. But again, you can't deny it. We've got the divergences going on, and that led me to believe that we had the bottom. But we got a boatload of bad news today. Again, Trump coming out there rattling the markets. It's getting to be a daily thing where Trump is moving markets up and down, up and down. But again, we've got these divergences. If the January low is going to hold, maybe we've gone just a little bit lower and we'll bottom out at near this trend line, or maybe if we breach it, we take that level out and we get that other scenario. Let me show you those. But I did want to show you this possibility. We have this further extended wave 3 to Friday's low, and then we rebound back up, and then now we're getting wave 4 and 5. Certainly a possibility if, again, we have our first two waves of minor wave 5 being 1, A, B, C, and 2. Certainly possible here, but again, don't want to rule out, as I keep saying, don't want to rule out the other account. But I was wrong about that low. Still might be right about the January low holding. We'll see what happens. Couple of different counts, Elliot wave counts, and two in play. This count is still in play that we have this wave 2 here, and the other is that we never finished minor wave 4 over here. MACD had a bullish divergence as well, but it's rolling over here. So again, still may try to take out this level, still may try to move beyond the January low and move towards the 200. And if that is the case, my count will be completely invalidated. So slightly breaching this level. I was wrong about the Friday low. Still might have the January low hold up, but if I'm wrong about that, then again, watch that 200 period moving average in the daily time frame. But beautiful divergences are forming here. So again, we're likely going to see something happen that's going to give us a tradable bottom. And we'll see if that's with a higher low, or do we end up tanking down to the 200. That's where the institutions will come in, because the 200 period moving average is watched by the institutions. Let's take a look at the two scenarios. I'll be watching this bottoming tail that we got here at the end of the session. We had a rebound at the very end. We'll be looking to see, do we take out that low, or do we try to build upon that? We'll see what happens. And I told you back on the 19th that, again, we were turning off of this trend line, that you've had a failed breakout, and then the next day we went down. We moved above the January high right here by 1 point. 1 point that wasn't very convincing. We did it here, but we never got really the confirmation of the real breakout there that was more convincing. No breakout, no confirmation and follow through of that, and we had this sell-off now. Taking out the 100 period, we're taking out the cloud, we're back at that CPI gap fill, so there's risks that we now take out this level if I'm wrong about that level holding up. But again, always tell you what I think, right or wrong. Always tell you what I think. I've made some amazing calls, but I'm human. I'm not going to make every call correct. Still think we got a shot at that wave 2. We'll see what happens. MACD is going negative. The risk is it stays negative and we take out the January low and get a bigger drop. Let's take a look at the other Elliott wave counts, but wanted to show you this. 10 and 20 got a bearish cross. They're dropping. Still above the 50. The 10's about to cross below the 50. If we end up, again, losing the January low, we could see a bearish arrangement of the moving averages. I was correct about the December top and the January top over here about the pullback and the back test. Told you over here I wasn't sure if we were going to get a higher low or lower low. Last Wednesday, going back and testing the trend line of support, and then Thursday we broke it. Friday, and I told you if we broke it to watch the gap fill and the 78.6 Fibonacci. And we tried to bounce there on Friday, but that rally ended up failing. So we had the new lows today. We'll be watching the January low. So right about these peaks, I was wrong about this bottom. See if the January low holds. And I told you about that top on a February 19th because of these divergences on the 50-minute chart and the 30-minute chart and the 60-minute chart. Played out very nicely, but again, bounce off the rising trend line here with this low, took it out slightly, filled that gap right here on Friday. CPI gap in the 78.6 Fibonacci, tried to rebound, but we stalled at that trend line once again. So again, it's likely that if that count is still in play, the two, that this is fifth and final wave. Like I said, we take out the January low, then again, it will invalidate that count. You get the multiple point bullish divergences forming on the S&P 60-minute chart and here on the 30-minute chart. Again, it is multiple point divergences that often give you a reversal. See what happens. But again, we don't want to rule out a test of that 200. Yes, I still think the S&P is going to go make new highs. Yes, I still think get the final phase of the blow off top, but I think that we are either finishing wave 4 or we are in minor wave 5 and getting our second subwave of minor wave 5, as I've said. Back to the 60-minute chart, keeping these divergences on the 30-minute chart, the 60-minute chart in mind. Let's take a look at that daily now. Here's a scenario that I told you that I thought was in play right here. And I told you when I called that peak at this trend line right here on the 19th, I told you, hey, I think we're going to either likelihood go back to the trend line, and if we break it, fill the gap here from the CPI gap at 58.43 and then get a higher low. Those were the two scenarios that I thought were likely in play. I had another scenario that I said might be in play, but my other count was invalidated. I won't go into that, which if you follow along, you know I had that other count that was invalidated. This count I think is very likely. But again, I could be wrong. If we're headed back to our 200 period moving average, and we very well could be, it's likely going to be a tradable bottom. Institutions watch the 200 period moving average. So again, here minor wave 4 is done here. We have wave 1, We have the first subwave of minor wave 5 up here, and then we've got this A, B, C for 2, subwave 2, and then 3, 4, and 5. Now, if this is invalidated, we take out the January low. Be watching this, and I'll show you that count right here. Before I leave here, again, the two counts that I was looking at is either a bounce off of this trend line, which we tried to do it there on Wednesday. We breached it, and then we tried to get a bottoming tail. Thursday, we took it out. That was Tuesday, we got the bottoming tail. I'm sorry, Thursday, we took it out. Friday, we rebounded after filling this gap. So those were the two scenarios that I was looking at with this possible subwave 2 count. The minor wave 4, if it did not complete over here in January, you have it still in play at the 200 period moving average. So if we didn't finish minor wave 4 over here, then you have a 3 over here at our December top, and then you've got the A, and then the B, and then the C, which would come in play down here at the 200 period moving average. If you did that, I've drawn a parallel boundary that could be in play here for a channel with this upper boundary right here, and that would be the scenario where minor wave 5. Now, Bitcoin did do that. The S&P doesn't have to. Bitcoin did test the 200 period. It moved just beyond it, and then it bottomed out and had a massive rally, and then now it's giving that rally back and pulling back. We see a similar situation to what happened with the bounce off the 200 with Bitcoin should we break the January low. So we'll be watching. But this is my alternative count. People asking me, well, we topped over here. This is the top. And all the volatility is causing a lot of people to think that. Again, I don't think that that's the top. I think we're going to go to new highs. Again, the weekly signals are at a make it or break it moment. Again, you can't judge the weekly signals based on the first day of the week, okay? The story will be told what happens by the end of the week. And we got a lot going on this week. Jobs report and Powell speaking at the end of the week. Tariffs. We got really bad news on GDP again today. This is my alternative count here. And again, we'll be watching if we do go lower. We'll be watching the 200 period moving average here should we take out the January low. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, if you like me having the guts to tell you something even when I'm wrong, please consider supporting the channel today. Just follow the link below to take you to a secured site, and you can donate any amount you want. I thank you for your consideration for that. Again, I pointed out over the weekend, I'm pointing out again today, again, momentum remains bearish. We had the rally up on Friday. We gave it back, and we came back, and again, we're still testing this gap fill area, and again, possibly getting a higher low above the January low, but we take that out. Watch that 200 period moving average. The moving averages are pointing down, so there's still risk of taking out the January low. Momentum remains bearish. I've talked about it when I called this peak over here. I told you it was validated with the momentum shift right here. And again, we were looking at that trend line from the 2023 low, and I told you if it's taken out, then we're looking at this gap fill area. Should that be taken out, we're looking at the 200 period moving average for a wave 4 completing at lower levels. S&P daily chart here. One thing to consider here is that often the S&P and NASDAQ diverge from one another, and while the NASDAQ is taking out the January low, the S&P so far has not. And I talked about that on Friday with the weekend updates. So again, they are diverging, which again, oftentimes they do diverge at turning points, something worth paying attention to. NVDA, again, it sold off 9% today. NASDAQ took a hit. NASDAQ was down 2.20% today, down 450, almost 59 points. 159 points. Momentum remains bearish. If I bring up the awesome oscillator, we're still negative. We're still getting red bars. So again, the risk is that we just keep coming down to that 200 period moving average and take out the January low. We'll see if S&P tries to form a divergence with NASDAQ or not. We'll see if the January low will hold, but that's the bearish scenarios that we continue down. The 200 period is at 57.23. Currently, we closed here at 58.50. So if we go down lower, you're talking about another 125 points lower if we continue to slide, and that would be that wave 4 scenario. If we could turn back up, then maybe we see some green here with the awesome oscillator, and try to recycle back up with the MACD and the stochastic. We'll be watching the January low. It's coming to a make it or break it moment. Our January low right here is at this high 5,700 area. The low is at 57.73. 57.73. So if we can hold above that, then you got a shot at a recovery with the channel on the 60-minute chart and maybe seeing some green here. If you break it, then watch that 200 period, which is at 57.23. So 57.73 at the January low, 57.23 at our 200 period here on the S&P 500. Up NASDAQ, again, same thing here. Got the red bars going on, your negative territory with the MACD and the OSM oscillator, but we are in oversold territory, and here we are just above the 200 period moving average on the NASDAQ 100. The 200 period is at 20,211, and our low today was just above it at 2,279. So we're just above that 200 period again at 20,211, just a little bit higher than that. We'll be watching the 200 period here. S&P is still well above it. NASDAQ has taken out the January low already, and again, just above our 200 period moving average. Bitcoin broke the 200 period moving average and rebounded off of it. Talk about that because Bitcoin has a positive correlation and it usually leads markets. Does that mean S&P is going to follow it to the 200? We'll have to wait and see, but NASDAQ certainly is at this point. Watching these trend lines, here's a log scaling with our weekly. Again, we broke it. We got a bottoming tail last week. Now we're slightly taking out. We're struggling at our 20 weeks. So the risk is that, again, we go and take out the January low and test the 200, and then we'll see what happens there. If we get a higher low, what does this look like by the end of the week? Remember, we've got Powell this week. We've got the jobs report. Powell's going to be speaking on Friday during the market session. Trump and his tariffs tomorrow. I told you about that horrible reading with the GDP forecast out of the Atlanta Fed, and it's gotten even worse. It was at 1.5%. Now they revised it, and now it's 2.8%. So again, I talked about that over the weekend, the revision. I mean, 4 weeks ago, this thing was at, what was it, 3.8% or 9%, whatever it was. And then, 4 weeks, that was 4 weeks ago in mid-February, it was at just under 3%, right around 2.8%. That hovering just above 2%, and then we saw that collapse down to negative 0.1. Now it's at negative 0.28 for the quarter of GDP for the first quarter. We'll get that number officially. We'll close out the quarter at the end of March, at the end of this month, and then we'll get the number at the end of April. That could be a big mover. The market might shrug this off if we try to rally, but then later it could be an issue. This could go back to positive still, as I've said, but right now the Atlanta Fed rising it down even further, and that freaked out markets on top of Trump's tariffs today. Again, just talking about these trend lines. This is the weekly with our log scaling. We're breaking that 2023 trend line. We breached it before, and then I've drawn it now from that low, from the January low. Here we breached it last week, but we tried to rebound and closed pretty much just right at it. What happens by the end of the week? But we are breaching that trend line. The risk is that we try to take out the January low. Then you can see that here on the daily chart that we've reached it. Are we back testing it and we go lower? Or do we get back above it? Trend lines can change. Trend lines can change. Slightly breached at the January low, back below this level. I had connected those levels. We slightly breached it. Do we now end up, changing that trend line a little bit? But our failed breakout has formed this negative divergence, which is giving us a sell-off. Here's a linear trend line in the weekly time frame, and we're right at that level still. So that's an interesting thing. Some people look at linear scaling, some people look at log. I look at both. Pay attention to it. We'll be looking to see, does the RSI go negative here and we hold below the 20-week and get a 20-50 sell signal and go lower? Or again, do we try to mark that as a bottom, the test of the 50 level, as so often is the case? Watching this trend line closely with great interest, this linear trend line here going back again to that 2023 low here on the S&P. We'll see it. We'll look at it on the daily, and here it is again testing this level. Our linear scaling. My trend line moved on me. Hang on. I love the charting program here, but sometimes you save a trend line and it moves on you. If you pin it, it won't move with the chart, so you're stuck. So anyways, here again, we're testing this trend line slightly below it. We'll be watching to see what happens at the linear trend line, the log scaling trend line. Do we attempt a recovery, or do we have to go lower? We try to carve out some type of tradable bottom. Also be watching the RSI. Again, this summer we haven't really tagged extremes, and we've held above there. That's marked the bottoms. Maybe we get it that way again. Back at the 2023 low, we had a bullish divergence here, and we were at extremes at this bottom. And then also here at the April bottom, we did tag the extremes with the August low. But again, most of those pullbacks didn't quite reach the 30 level and did not drop below it. If we get the same thing right here or not. Important trend lines to be paying attention to on the S&P 500. I want to show you Bitcoin's chart because, again, it has a positive correlation with the market. Bitcoin ended up collapsing down to the 200 period moving average. All kinds of bullish signals right there. Got this bottoming tail. We dropped 7% in one day, rebounded back up, and then it soared here. Trump announced the crypto strategic reserve. Sunday it surged, and then we've given it back with Trump coming out talking about the tariffs going forward. Trump's moving the market, moving markets up and down every day. Might as well just shut off, CNBC and start watching the news coming out of Washington. Trump's moving the markets up and down every single day. It's amazing. Really, that's because, again, Wall Street and the crypto community, they love his economic policies. They love his deregulation. The crypto community loves the crypto strategic reserves. They love these things. But they all hate his tariffs. They believe that they cause inflation, and they believe a trade war is going to happen. Again, he's really moving the markets. It's really pretty, not to bore you with Bitcoin, but I just want to point out as Bitcoin hit that 200 period, one reason why I called a bottom for Bitcoin is because, again, we were getting the multiple point divergence on the 4-hour chart. You can watch my latest Bitcoin video, and I'll link it at the end of this if you want to look at it more. I don't have time to show you, but we were getting the divergence just like what we're doing now on the S&P 60-minute chart. And again, was confirmed by these bullish signals here, and then the bullish signals here with the confirmation bar, and then we got that announcement from Trump about the crypto strategic reserve right there, and then now we're giving it back a little bit. But again, I think this low's got a good shot at holding, but you got these reversal bars. Could we see the same thing? We got this bottoming signal here, and the cloud is flipping, and so forth. You got these bullish bottoming signals. Could we see the same thing with the S&P 500? Now, maybe it follows Bitcoin down to the 200, but could it be that we're bottoming out with both of them, and could the S&P still get a higher low? So I wanted to present to you both scenarios if we do go down to that 200 period. But this is interesting that Bitcoin's getting these bullish signals at the 200. Could we see the same thing for the S&P 500? Balance of power is going back into positive territory. Even though we're selling off, pulling back, the signals are still there. So pretty interesting. We'll be watching. Bitcoin has a positive correlation with the stock market. Now, with NASDAQ, I don't have a reversal yet. The momentum line's still bearish. Signals still remain bearish. We still have bearish signals here. But you are seeing the possibility of a bottoming signal show up here. This is just looking at short-term momentum. As the top over here looked at short-term momentum. Have the same bullish signals here in NASDAQ that I have on Bitcoin. So again, just something worth paying attention to is the 200 period here on NASDAQ. This is a daily chart. The S&P, I don't have that signal here. I do have this X that could be marking a short-term bottom, but I don't have those other signals that I have on Bitcoin, and I don't even have the momentum B there for a possible bottom that the NASDAQ has. Again, momentum is still negative. The momentum line is still bearish. Signals are still bearish. So again, we're watching to see, do we find support at the CPI gap fill and the 78.6 Fibonacci, or do we go and take out the January low and start moving to that 200 period moving average? But signals remain bearish as far as momentum is concerned and the short-term trend. Risk is that we try to take this level out. Got those bullish divergences going on with those 60-minute charts. Similar to what happened with Bitcoin and its 4-hour chart forming that multiple point divergence that gave us that big rebound. Now, same thing. We've got the channel here on NASDAQ. We tried to get above it today and couldn't do it. We've got this falling channel. We came down to the lower end of it. We're just above that 200. We tried to bounce off the lows of the session with a possible bottoming tail. But look at what's going on here. And again, we still may go and take out that 200. You've got this divergence going on with Friday's low. And then now you're turning down again. Do we get another reference point of the divergence right here as we're turning low here? Do we now turn back up and rebound or go under the 200 and complete this divergence? Is it still under construction, or do we see it come to a conclusion? Near that 200 or above it, or do we take out the 200 on NASDAQ as Bitcoin did? But these divergences, no denying, they've marked some interesting turns. Now, sometimes just short-term pullbacks, other times reversals, tops and bottoms, pretty fascinating. Looks like we're trying to form a multiple point divergence here with this new low today on the NASDAQ. I'll be watching these divergences. You have it here on the RSI. You got a divergence here on the MACD. Is it still carving out? Do we take out that 200 period moving average? We'll be watching to see how it unfolds here for the NASDAQ. But NASDAQ's already moved beyond the January low. We'll see if S&P joins it or not. We do have that failed breakout. I told you back up at the top. Again, we had the failed breakout above the December high. And we've seen now the selling come back and take out the January low. We broke this trend line right here. We're coming back to the 200 period. We're below the 100 period moving average. We lost the cloud in the 100. The 10 has dropped below the 50, and it's dropped below the 20 here. So the risk is we take out that 200 period moving average. And again, below it would be bearish. Bouncing off of it would be a bullish thing. Again, we'll be watching to see if the MACDs can turn back up. We had these negative divergences on the MACD and the RSI that gave us the failed breakout. That's what I talked about on the peak back on the 19th. We tried to get a confirmation, and it failed really on both the S&P and the NASDAQ. Forget NASDAQ got those topping tails in the monthly time frame, so we're watching to see what happens this month. We're starting off the month with selling pressure. How do we end the month? We'll be watching. Remember, we had that gap fill from the election rally that we've never filled on the NASDAQ at 20,227. We're about just a few points above it, and it's hovering right there at the 200 period moving average. So do we fill the gap from the election and then turn back up? And then if so, we'll be watching the cloud. We'll be watching the 100 period moving average. But we've broken this trend line and again, taken us to the 200 period and our gap fill at 20,227. It was down almost 9%, down 8.69%. Again, I've talked about the channel here. It's slightly taken out the low from early February. So we still have this channel, continues to sell off after earnings. Could it form a bullish divergence? We'll be watching. And you do have a falling price channel now. Rejection at the gap fill from the DeepSeek sell-off. And we're slightly breaching the trend line from here on the weekly chart with their log scaling, slightly breaching that. We'll see what happens. We tested it last week and we bounced off of it. Do we close strong this week, or do we close very weak and watching that 200 period moving average? If we try to take it out, and if we do we try to bounce off of it like Bitcoin or not, or do we hold above it at the gap fill from the presidential election? In this trend line with our log scaling closely, and the trend line here with their linear scaling directly below. If we tested that, we would be testing that 200 period and taking it out. These negative divergences that is giving us volatility, as we've seen with other times. I still think that Bitcoin and the S&P are going to make new highs. I'm not so sure about NASDAQ of NVDA. Sometimes NASDAQ and NVIDIA, and sometimes NASDAQ and S&P can diverge from one another. But just some trend lines we need to be paying attention to on the NASDAQ, our linear and our log scaling.